Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host Joel Alcana, along with Brianna Valesky, and we have Jeff Hirsch, editor of the Traders Almanac, coming on to join us today. Jeff, how you doing this morning?
I'm just great. How you guys?
We're doing good. I was off last week as well, getting back in the swing of things here, and I'm just taking a look at the notes in the almanac as I do every day, and I see a week after the July expiration, we're prone to wild swings in the market. Been up 9 of the last 12. But also, you warn a little later in the week, beware of the summer rally hype. Historically, the weakest rally of all seasons. Jeff,
Right.
what's your outlook?
Well, I mean, market's looking a little pricey. It's made a nice rally here. Dow is still, below the May highs, and basically the old summer rally was just sort of a brokerage firm ploy to get people who are less interested in the summer interested in the market. And historically, as you see in the almanac, there, it's the weakest rally of them all. So just it's something to be leery of. We tend to have those end of third quarter sell-offs. Last year, everyone was pretty convinced that sell in May was not in existence, and then we had our very typical end of September, end of Q3, first half October sell-off with a snapback. So that can happen at any time, and it's much more market's much more prone to that during that August, September, and even early October period. So we're watching out for that.
I mean, if you look at things in the grander scheme of things, I'm pulling up here a weekly chart. We are just coming up. We've been in a big trading range. The lower end of the trading range tested earlier in the month with the Greece crisis. Now we're back up at all-time
Right.
highs. Jeff, I know you go with historical data and what's gone on in the past. So when something like Greece pops on the radar, do you just try and say, hey, these are my historic. This is the work that I've done. This is what it's worked for years. I'm still going to stick with our seasonal patterns or seasonal trends, or do you try and factor that? Is there any kind of a little bit of a fudge factor or something else that you look at when extraneous events like that come up?
Well, I mean, we have a strong bias towards historical patterns and seasonality, but that's only part of it. We use a relatively multidisciplined approach. I mean, I look at fundamentals, especially when I'm looking at individual stocks and sectors, and big fan of technical analysis, and I sort of snicker at that argument between fundamental analysts and technical analysts. I'm not sure why everyone has to be one or the other. I think most of these things are best used in combination. You know, it makes a nice recipe, and also the macroeconomic and geopolitical factors. We're always watching that. So Greece is an issue. I think even bigger is probably China. With their potential bear market after the big run up there, the bear market continuing. So seasonals and historicals are a starting place, but you have to pay attention to price and volume action and what's going on in the economic and corporate quarterly earnings and revenue numbers.
Don't they put you in jail if you try and sell or short in China? It's against the law to go against the market.
I thought they caned you for that.
Yeah.
Oh no, that's Singapore. Sorry.
Oh, okay. All right. Just, let's get away from the stock market here just a little bit and, take a look at the commodities markets. I'm sure, along with your dad, you've been following the gold market for a long time. Just took out the lows of the move yesterday, got down to 1080 here. Boy, oh boy! I mean, you can't make money just sitting there holding gold if it's going down. Doesn't pay any dividends here.
Nope.
What do you think? Could we
I'm
see
not a
triple
big fan of
digits?
gold. Never was a real gold bug. I've traded it on different um, secular market moves and seasonal moves. Not something I hold any positions in or any interest in at the current moment. I'm more interested in black gold. We are working on a potential triple bottom there in the oil markets, and that's something we're looking at. But we're watching the dollar on that too. So oil's going to have trouble going up if the dollar keeps going up. So gold, I really have no interest on the upside for that, even short or long term.
Okay.
I mean, perhaps seasonally there's an opportunity. I mean, fourth quarter gold moves have been and especially in the stocks, have been a long existing historical pattern. That was looking like it's setting up, which is one of the things we look at. You look at historical patterns and current market setups, and gold is potentially setting up for a move here into that fourth quarter with sort of a summer low period that you're highlighting. So, other than that, I'm not so enamored with gold.
All right, so you're looking. You said you mentioned here the crude market potential triple bottom. What are you going on? Are you going on some weeklies here? Are you just looking at
Just
that
the daily
fifth?
chart, even looking at we hold the position in the USO. We started picking it up back in the late winter, early spring. If you look at, that sort of, was it late January, the two lows there in January, February, late January and early February and March. And then right here, it's sort of touching that same number there, maybe a little higher than the ultimate low you had in March. Potentially a classic triple bottom setup, but remains to be seen if we can hold support here. So that's something we're watching very closely.
Jeff, just going back to the market here, I mean, we are busting up here towards the all-time highs, but I mean, it's just a couple. Doesn't you feel like it's just a couple stocks here leading us to the promised land here? I mean, Google, your big tech stock, had to move last week. You have, everybody, getting long going into Apple earnings. Is that something that's another concerning factor to you in the
Yeah,
markets?
you're not going to get an argument from me on that. I'm looking at a real sideways market. I mean, I updated the move from the midterm low to the pre-election year high for one of my talks last week, and from the March high, that's just for the Dow, which is I still look at that, even though some people don't think so. And the S&P also, I think it was a 0.1% increase from March to the May high. I mean, we've gone nowhere. The Dow's still not at a new time high. Neither is the S&P on a closing basis. So, yeah, I just looks like we're really struggling to move higher. I suspect by year end we'll get a little push higher, but maybe that 10% correction over the next month or two or three. So yeah,
Okay.
I don't think this market's really broadly driven.
Okay. And just going back here, you've been in the markets for a long time, and IBM's been around for a long time here. Big run up here into earnings. Looks like the street, including me, was looking for some good earnings here. Now, boom, right back down. Not quite to the lows of the move here, trading down, $10. Any take on IBM here? Is this maybe just a little opportunity to get into the stock $10 cheaper than it was yesterday, or are you still not? Are you still just not comfortable with their long-term outlook?
Well, I mean, IBM is like one of those stocks that's a classic benchmark stock. You can almost use it as an index. Over the years, it has. It's also in the technology area, and one of our seasonal trades here is the high tech trade along with biotech here in the August through the end of the year, and for biotech into March. So it's looking like a trading opportunity long term. I don't fundamentally follow IBM's future prospects in that. I'm not an analyst on IBM in particular, but technology, it's setting up for a decent move here. We're looking for a pullback even further before we get into these stocks. So I wouldn't necessarily jump into it right at this particular moment, but it's something to be watching for a nice trade through
Okay.
year end at least.
All right. Also, one of our earlier guests made a good point here. He following the big tech, but following the small caps as well here. And boy, I mean, this thing, the small cap, the Russell here is stopped well shy of an all-time high here. It's just another thing to support a possible bearish thesis.
Well, small caps tend to outperform large caps through the illustrious month of October. So, and that's when we tend to pick up our baskets of stocks. So I wouldn't be jumping into small caps right here. Bear market, possibilities. I don't see that so much this year. Next year, I've become more concerned with the nasty election process in front of us, and having run quite a bit for several years without any 10% correction. So small caps, I'd be waiting for even a further pullback late September. Even if we get it in August. So I'd be patient there. It's kind of like that a good golf swing in everyone's bag that they forget it to use. It's the step away swing. The waiting for leave the bat on your shoulder. So there's no rush to jump into these things right
Do you
here,
do that? Do
especially
you
for
like where you tee the ball up and then you take a step back and then you step into it? Do you ever
it,
do that? Because you can.
and even on the putting green, when I'm
Oh,
really paying
don't.
attention and my friends are giving me a hard time, I step away.
No, I'm talking about the step away golf swing where you tee it up and then you take a step and a half back and then you step into it and try and hit your
No,
drive.
not the Happy Gilmore move. I'm talking about a step away, take a breath, and resituate yourself.
Uh,
The not swinging stroke.
Okay, so goes the transportation market, so goes the stock market. And the transports got really roughed up during the Greek debt crisis. Put a low in here, but boy, it's bouncing back. But boy, not nowhere near the all-time highs here. And now you got several days of consolidation. And you're looking for just a dead cat bounce here in the transportations.
This is where I layer my seasonals in there. Still, a period of bearishness for the transportations in the summer, and again with a lot of the stock sector indices, they don't really pick up on a bullish seasonal move until October. So again, no rush to get into this. Here we are in the worst 6 months, the worst 4 months. Some of these sectors are really behaving quite closely to their historical seasonal patterns. Patience, back off, leave the bat at the shoulder. I think there's potential more downside for, tech here and transports and the overall market.
Give me something you like, Jeff. Come on, you're even getting me even more bearish than I usually am.
No, you're not hearing me. I'm saying we're looking to get into tech and biotech here, coming up in August on a pullback. So maybe not today, but we're starting to really come around to those sectors we like. But I like the short side of them on a lot of things. So we're short some of these sectors. We've got some stocks out there that we're looking to short on the downside. I think McDonald's is a interesting short play. I don't know. I haven't really tried the artisanal chicken sandwich, but I don't understand it's very good, and I think they're
What's it called?
they're failing. What's that?
What do they call the new?
The artisanal chicken sandwich. You haven't seen that from McDonald's?
I have not. Luke, have you seen the artisanal chicken sandwich from McDonald's? How is it?
When I get off the highway to come into my my village, there's a McDonald's up there by the exit, and I saw the sign once. I just lost it.
Okay. What about the SOX here? The SOX semiconductor. Boy, that took a big hit. Intel, Micron. These stocks are just getting killed here. Making a little bounce off the lows here. Any seasonal patterns to note here in the semiconductors?
Yeah, it's not quite ready yet. I'm trying to make this point clear. Where right now we are in a period of time where most sectors are not seasonally favorable. There are a few things that you can look at, but for the techs, it's something it doesn't really pick up until the October period, and I think you got to be patient here. Where most of these things are still looking weak on the charts, looking weak seasonally. Some fundamental numbers. We're going to find out more this week, and with a lot of the earnings releases, and we had negative GDP. So, I can't make a great case for getting bullish over the next month or two. Give me a little bit more correction, a little bit more pullback, and then I can get on board.
Well, it sounds like you kind of have a balanced portfolio here, and it seems like you're really a little bit more balanced to the short side. Would that be a correct statement? I mean, or do you just as opposed
to the short side and the cash side, we have a lot of ammo left in the chambers, and we're just sort of being patient right here, as we tend to do during this time of year, especially after we've run up quite a bit, as we did from October through the spring of October of last year through the spring of this year. So, yeah, we're cautious.
Okay. Wow. I mean, you couldn't be any clearer on that. Jeff Hirsch, he's the Hirsch, the editor of the Stock Traders Almanac. You should definitely pick that up from Wiley Publishing. A lot of great information that Jeff puts out to us on the show with additional commentary. We definitely know where you stand, Jeff. We appreciate your honesty. We'll follow follow what you say in
Yeah,
the
and
market.
thank you.
And we
If
hope.
anyone wants to have a look at some of the stuff, just go to our website. You can, try a free trial, kick the tires at stocktradersalmanac.com, and you can see some of the things that we're looking at right now.
Thanks, Jeff. Great input. We'll talk to you again soon.
Thanks again, guys.